How's everybody doing? This is Israel, your loan officer down here in California. And today we're going to be talking about financial tips, marketing news, and the most important thing, mortgage interest rates. See what they're at this moment in time. So with that, let's get started. Hello, this is December 1st, 2020, and let's take a look at the news as of today. MBS recap, serious sell-off in bonds. Is it time to panic? Well, this is what the article is talking about. And with that, I want to share with you guys a slide that basically talks about just that. Now, this is for mortgage-backed securities. If you heard of this word before, it basically is the bond that controls if either mortgage interest rates would go up or go down. And now this graph is quite interesting. It's broken down into different months, starting from July upwards to now December 2020. And on it, you're going to see two types of bars. A green looking bar, which is stronger numbers, red, which would be weaker numbers, and so on and so forth. If you see these candlesticks, it basically shows where the bonds or how much the bond was selling on that particular day. Now, if you look on July, there were more green candlesticks than they were on August 2020. And so on it goes. If you notice, there's a pattern here. It seems to be going stronger, then weaker, stronger, weaker, stronger. And where are we at now? Starting December 2020. And will it go up? That's the question. And if it does go up, how much would it go up? Well, interestingly enough, yesterday, Fauci came out with some interesting news about how, after analyzing the data, it looks like they're going to bring back, the kids back to school. Now, that's going to be a great news, a positive news. And what you're going to see on these videos is the relationship that good news and bad news has with these mortgage-backed securities. Bottom line, if anytime you hear bad news on the news, these mortgage-backed securities are going to act in a positive way towards mortgage rates. If you hear good news, it's going to be the opposite. Mortgage rates will start going up. And so I want to just share the video really quick with you guys. So let's just check it out and we'll come back to this slide.
And as you accurately quoted me, the default position should be to try as best as possible within reason to keep the children in school or to get them back to school. If you look at the data, the spread among children and from children is not really very big at all, not like one would have suspected.
So as you saw, it looks like after analyzing the data, they're saying that, young children are not vulnerable as they once thought they were. And so basically what that's going to cause, my prediction here from looking at this graph and looking at different news that we've gotten in the past few months, it might be that interest rates will go up. Now, how much higher will they go up? Well, I don't think they're going to go extremely high. If anything, it's going to be about an eighth. And that's what I wrote down here on my notes. Why an eighth? Because, as you know, officially we haven't gotten the president elected yet. Chances are we all know where it's going. And so what's going to happen is eventually they're going to have to start this economy. And so I think interest rates will go up, but it's going to be a slight increase. Eventually it will start hiking up. But for the meantime, it looks like it's going to be just small, very, very small increments. And with that, we're going to be covering the mortgage rates that we could be offering you as of today, December 1st. So with that, let's go ahead and jump on those interest rates. Okay, so basically here we have a conventional loan. It's going to be fixed for 30 years with a down payment of 20%. You're going to see some words in Spanish here. I'm going to be changing this. I usually do these videos in Spanish as well. So as of right now, just bear that in mind. I'll be changing those titles. So the breakdown is quite easy. Depending on what your FICO score is, this is the type of interest rates we could be offering you today as of December 1st. The following column is going to show the interest rates that we were offering the prior date, in this case yesterday, the 30th. And on this side over here, you're going to see what the competition is offering. Now, as of December 1st, it looks like Bank of America and Wells Fargo are right about, offering the same rate, 2.65, both of them. But check this out, the APR in our case is extremely more competitive. The APR, as you know, is basically the entire cost of the loan, with all the junk fees and everything related to that loan. So from the looks of it, Bank of America and Wells Fargo are a little bit higher. But here's the interesting thing though. Not so much in the conventional loan, but on the FHA, you're gonna be surprised. But again, any changes from yesterday till today? Not really. Everything seems to be basically unchanged. Now let's go on and take a look at the FHA loans. FHA loans, again, for anyone that's interested on an FHA, this is a requirement is a 3.5 down payment, and the interest rates are as followed. For a FICO score of 640, we're offering you a 2.25 with an APR of 3.331. What is the competition you offering? Well, Quicken Loans, it looks like it seems to be the only one that's at par with us, 2.25, but take a look at the APR. It's much higher. Now, this is what I was talking to you just a few seconds ago. All these banks, if you were to go to their website, which that's what I do every single day, I go to their websites, grab those rates, bring them in, and so we can compare apples to apples. A lot of these websites, what they do, the requirements is, we'll give you this rate, but you're going to need a 740 FICO score or higher. Now, that's what we're also offering, but ours is lower or if not the same. But here's the kicker. Take a look at this. If you were to have a 700 FICO score, we would still be offering you a 2.25. These other banks, not going to work. They're going to require you the 740 FICO score, or else you're going to get a higher rate. So just keep that in mind. For the most part, 99.8% of the time, we're always beating the competition. And if we're at par with them, chances are the APR will be that much lower, which at the end is going to be more savings to you. Now, moving on to the next segment is what I call, what do these rates, for anyone that's looking to purchase or refinance in real life properties as of today, what would my payment look like if I were to purchase either a townhouse or a home? If we were to apply these rates, these are the payments. And we go all around Southern California. In this case, we're going to be hitting two cities. The first one is Woodland Hills townhouse. The price on this one is $320,000. This is going to be a 2-bedroom, 1 bath. You can kind of look at the pictures here. And the payments are as follow. Depending on your FICO score, these are the rates we would be offering you as of today. And this is the entire payment. Now, when I say entire payment, it includes everything: property taxes, hazard insurance, principal and interest. And if there's a PMI, private mortgage insurance, those will also be added into them. And lastly, down here, you're going to be seeing your down payment, as well as your HOA, which in this case is $448. So you would just have to add these $448 on top of whatever payment you see down on this side. Okay, that's going to be for a townhouse located in Woodland Hills. Let's go take a look at a home. And in this case, we're going to be hitting Tahunga. This is a $359 price tag on a 2-bedroom, 1 bath. Now, what I found interesting is, if you're not familiar with Tahunga, it's really up there in the mountains. I mean, it's going to take you a while to get to these locations. But now with this new economy where everything's through Zoom, there's a lot of people working from home. I mean, you could definitely see yourself, if you don't have to do the commute, getting a pretty good home for a pretty decent price. And again, in this case, you're talking a down payment of $12,565 on an FHA loan with a complete payment of 2017 if you were hovering between the 740s and the 700 FICO scores. If you're a little bit below that, let's say 640, you're looking at a payment of about 2085. Mind you, this is a home, so you're not tied to putting an HOA on a monthly basis. So that's basically what your payment would look like. And with that, I'm going to be closing this video. Thank you so much for your time. God bless you, and we'll be seeing each other on the next video. Take care. Bye-bye.